If you love our crypto content or are looking to learn even more about crypto, be sure to check out and subscribe to our new YouTube channel after this video dedicated to all things crypto. Find new videos every week. Be sure to check the link in the description.
Bill, it's been a while, but we got you on Real Vision eventually. How are you?
I'm great. Thrilled to be here. Thanks for having me.
So listen, you've been in this space for a long time and you're new to many people, but not to others. But let's go back and just go through a bit of your journey, how the hell you got here. When did you start your career?
This kind of circular path of, I worked in cryptography when crypto meant cryptography, not cryptocurrencies. I worked on Wall Street. I was at Goldman, kind of went through a phase of like learning all about financial markets, fixed income, built trading systems, designs, portfolio management systems. But then I got the internet bug and ended up joining Netscape pretty early around the time of the IPO. And that's more or less been my 20-year journey now, is just really focused on the internet eating the world kind of mantra that I've always had in my mind. And the things that have always resonated for me is how the internet can basically act as a great leveler and democratize access to anything, whether it's entertainment and media or now financial services, which has been, my big passion for the last 10 years. And have had a whole bunch of investments and startups in that area around payments, remittances, investing, now culminating with Abra, of course.
So talk to me about your crypto journey. So
yeah,
you start with cryptography, you're then in finance. So it's kind of, you're obviously going to meet this space at some point. When did you meet it and how?
So now keep in mind, when I was a cryptographer at the CIA, I didn't know anything about banking. It wasn't even really interesting to me. Of course, I made no money, so it didn't really matter anyway. I mean, I think one of my sons who works at a movie theater makes more money per hour than I made working for the CIA as a cryptographer. So the idea of dealing with money was so foreign to me, it didn't even factor into anything. And that obviously changed later, getting to banking and then, exits and startups, whatever. But it was a long route. I mean, I first started getting into banking when somebody recruited me back in my NASA days from Goldman, because they connected the dots on my math background and said, this would be amazing for you if you just dug in a little, and they pushed me and I did. So that was the start of a really long journey. And then the second part was payments. And so at Netscape, we built the first credit card gateway for the internet to actually formally accept an encrypted payment. And then I ended up building like a whole key management business in Europe for Netscape, for PTTs or telecoms that wanted to basically figure out a key management strategy, not dissimilar to the discussions we have today about, not your keys, not your crypto kind of thing. And then that basically led me down the rabbit hole of payments and banking, spent a lot of time in developing markets, learning about how regulation and government, especially in the middle of this whole choke point thing. I don't know if your viewers are familiar with what happened with this Project Choke Point, that the US government was basically executing to block services like in the remittance world and arms sales that they didn't like, totally legal services, but they basically cut off their access to bank accounts. And we're still dealing with the hangover of that. So in the meantime, I'm trying to build banking services in developing markets for the bottom of the pyramid, hitting all kinds of roadblocks that are just nonsense for people trying to store $25 in an account. And that led me, this is maybe a year after I had read the Bitcoin white paper, to say, okay, I'm tired of this. There has to be a better way. At that point, I had already personally started going down the Bitcoin rabbit hole. I had done a TED talk back.
What year was this?
2012 was when I did a TED talk at the main TED conference in early 2012, I think it was. So about 9 years ago. And Bitcoin,
Hi, I'm Raoul Pal. Sorry to interrupt your video, I know it's a pain in the arse, but look, I want to tell you something important. I can tell that you really want to learn about what's going on in financial markets and understand the global economy in these complicated times. That's what we do at Real Vision. So this YouTube channel is a small fraction of what we actually do. You should really come over to realvision.com and see the 20 or so videos a week that we produce of this kind of quality of content, the deep analysis and understanding of the world around us. So if you click on the link below or go to realvision.com, it costs you $1. I don't think you can afford to be without it.
What year was this?
2012 was when I did a TED talk at the main TED conference in early 2012, I think it was. So about 9 years ago. And Bitcoin, nobody in the audience had even heard of it. Silk Road was booming at that point. Bitcoin was at about $2, maybe $2.50. I was, you could still mine on a good personal computer at that point. And so it was just a totally different time. But my interest was more about banking than store value at the time, because I said, hey, this solves a lot of problems, especially with all the middlemen problems I was dealing with in the remittance world and the banking world. And that really pushed me towards this model. Of course, later on, my interests evolved dramatically as we now into DeFi and store value. Bitcoin story is digital gold. What's happening with, like I said, Ethereum 2.0 and this whole kind of just shift to moving every aspect of financial services into some type of Ethereum-based smart contract is just incredibly interesting to me. And so it's been a long journey of basically taking everything I know. I feel like it's the first job I'm qualified for, because after all these years, I have all these things that I understand around internet and marketing and banking and consumer internet and cryptography. And now all of a sudden I get to use it all in one job. It's kind of like a dream. I actually can't believe I get to do this most days, to be honest with you. Not every day, but most days. And so that's, sorry for the long answer, that's kind of the long circular route that it took me to get into cryptocurrencies and why it's so interesting to me. And our mission at Abra is particularly around the democratization of access.
So why did you talk to me a bit about Abra? How did you set it up? So you go from I get this is interesting. I'm interested in payments.
Yeah.
What made you then?
Right. I wanted to build a crypto-based banking service. At the time, it wasn't crypto, it was Bitcoin. I wanted to build a Bitcoin-based banking service where Bitcoin would be the core so that I could, in theory, eliminate middlemen, right? And you could have the option of storing your own keys. You could send money person to person. You could invest in other assets. Today, we call those things like synthetics. So I had this big vision idea of building a banking application with Bitcoin at its core. Now that's evolved significantly since then, where I would say Abra is one of the leading global retail crypto banking apps. But the original vision was very, very simple. I wanted a single app that would work anywhere in the world, where anybody could access a single app to send money, store dollars, store Bitcoin, send dollars, eventually invest in any kind of asset and using Bitcoin. Right. So I've had this long held belief that Bitcoin is going to become a core component to collateralizing different asset classes over time. And that was one of the original tenets for Abra, which we don't talk about much because it's actually obviously from a retail perspective, very complex. But in the background, it's always been a core kind of technology component of what we do. But today it's evolved. I mean, literally it's in trading and investing in over 100 cryptos, earning interest on your dollars, stable coins, as well as crypto, borrowing against your crypto balance, really moving in the direction of being that full bank for cryptocurrency. And ironically, now, even though we have lots of people with 6 and 7 figure deposits in Abra, we also have people in the bottom of the pyramid countries putting $4, $5, $6 in Abra in a single app. And I say ironically, because it was really the developing markets that pushed me to do this in the first place. And in the meantime, we've got every single aspect of the income pyramid or component of the income pyramid using this one single app. I don't know if there's any other app in the world, banking or otherwise, maybe WhatsApp, that has that gamut of income and kind of user profiles that we do now.
So your vision really is in the end is to bring a bank into that for everybody.
Yes.
So anybody who has a phone, you have a bank.
Yes, that's right. And I think crypto is the future of banking. And at this point, I don't see how I just don't see a scenario where that's not true. I really don't see how cryptocurrencies aren't at the center of banking in the future. Now it's on the edge, but I think it's moving towards the center and it will take over.
So when you go back and speak to your old mates from Goldman, as we all do they get it now? And how do they perceive it?
Yeah, they get the digital gold store of value story for sure. It's hard, partially because you can't argue with $1 trillion market cap, and nobody thinks Bitcoin is going to zero now. I think there's myriad discussions around, where does it really fit in? Is it a fad? Is it going to be better technology? But nobody thinks that's going away, right? As a matter of fact, I did have dinner with a colleague who's on the management committee. We had this exact same discussion. And then the second part of the discussion was, well, where is DeFi going? What does DeFi mean? Is it really going to work? Can it scale? And so that's probably similar to discussions I was having 5 years ago about Bitcoin, right? Will Bitcoin even work? That was the narrative 5 years ago. Does this work? right? Is it just for drugs? Is it just for the dark web? And now we're having analogous discussions about DeFi. Will it scale? Is it legal? What happens when these contracts are hacked, et cetera, et cetera? All good questions, all valid questions, but we haven't evolved yet to the narrative or the equivalent narrative for Bitcoin. But I think it's going to happen even faster with DeFi and all these kind of decentralized apps that are going to come down the pipe, whether they're on Ethereum or Cardano, faster than what happened with Bitcoin.
Yeah, I mean, when I look at this space and you look at the rapid pace of innovation going on in DeFi, and then you see that the central banks have figured this out and are now having to bring out the central bank digital currencies, I don't see what role there is for the average money center bank in Middle America or Middle Europe.
Yeah, it's tough. I mean, I think banks have a big problem, right? When the bond markets are not looking good, there's a hunt for yield, and you're certainly not going to find it at your community bank. Their value proposition, their value add is, look at it in the context of the internet itself. The only reason why you couldn't basically allow the internet to eat banking from the inside out, like it did with every other industry, is regulation. And the fact that governments print the money and they also decide who gets to distribute the money via the banks. And if that changes, there's no reason for them to exist, at least not in the form that they do. And that's a real problem. I mean, if you're in banking, for everyone, I don't think anyone else is going to care, because I think over a 25-year period, what's going to happen is that banks will become crypto-centric, and it'll just seem logical by the time it's done. And it'll be like, who talks about Kodak now, or who talks about Blockbuster? And they were a central part of our lives 25 years ago, and it's just logical that they don't exist anymore now. And I think that's what's going to happen to traditional banks. I just don't see the value proposition going forward.
But if their moat was regulation, then what is happening there? Because this is the big problem with DeFi. It's still kind of, nobody knows where regulation falls on this. How do you think it's going to play out? Because it's, because there's kind of centralized DeFi, and then there's truly decentralized DeFi, which is almost impossible to control. I think the regulators are so far behind.
Oh, totally. So think about it, right? The definition of a decentralized system, at least to me, is there's no off switch. So once there's no off switch, and the two best examples of that I know of are BitTorrent, which was probably the first, besides the internet itself, but BitTorrent, and the second being Bitcoin. You can't shut off either. I would posit there's no way to shut off either of those services today. And I think Ethereum is close, and I think it can get there, but not quite yet. But I think it's moving in that direction, even with proof of stake. And a lot of people are like, oh, it's not decentralized, blah, blah, blah. So these DeFi services aren't quite D yet. Shut off Amazon Web Services and you'll see what I mean. But I think in 3 or 4 years, there will be no more off switch. And at that point, to your question, what role does a regulator play if you can't shut something off anyway? Because there's nobody to go to and say, you're doing it wrong, you're not following the rules, shut it off. Right. The analogy I like with BitTorrent was they couldn't shut BitTorrent off. So the music industry started going after individual named users based upon IP addresses, with these RIA lawsuits. And they realized what a great idea that was after a few months and stopped doing it. Right. After everybody started hating the music industry. Right. So I just don't see, regulators starting to sue or go after individual users of these services. And at that point, there's nothing they can do.
The only point of fragility that I keep trying to think through the fragilities as we get to that end state. The only point of fragility is your ability to interact with the existing banking system.
That's right. 100%.
So if you want to bring money back into the US because you want to buy a house, car, pay your taxes or whatever, they still own that.
Yep.
That can make it very awkward still. They can just say,
totally.
Well, if you've come out of these protocols or wherever it is, you can't bring it back in.
Yeah, and that's what they're doing. Like if you look at what's happening in India, the discussions in Nigeria, it's about the on-ramps and off-ramps. Even China doesn't say, hey, we're not going to allow you to store ones and zeros in your pocket, which is like saying, banning Bitcoin, right? They're going to say, we're going to basically regulate the on-ramps and off-ramps and prevent you from transacting. And we're going to prevent third parties from acting as trusted third parties that hold your crypto. That's the best they can do, right? And so it's going to be those on-ramps and off-ramps that are basically going to be the choke point for a lot of this innovation going forward. And some will get it and become centers of innovation, Some will put roadblocks in the way. Like, I think India has 180 degrees the opposite perspective on this. They could become a mecca of innovation for banking and crypto if they would just do a 180 on their ridiculous perspective on continually banning crypto and then having the Supreme Court overturn what they're doing. Why somebody doesn't get held in contempt for trying to do the same thing over and over again, I don't know. But put that aside, I really do think they have it completely wrong.
Yeah, because India's actually digitized pretty rapidly.
Yes.
They build this layer on with the open APIs to their UPI payment system and the India stack, and they've got something really powerful.
Right. I mean, I would look the countries that should be like, I kind of look at it like, how do we leapfrog the West? Right. I mean, go look at the train systems in countries that leapfrogged us, right? Because they built their trains in the 90s, right? Well, what about banking? Why isn't Indonesia or India basically saying, let's move our economy to this model over 20 years? And if they came out and said that, I think people would move there to work on this. And as opposed to the opposite, which is people leaving to go work, less so in the pandemic, but euphemistically speaking, moving to work on these projects that are based in other countries. And I think this is a huge opportunity to reverse that trend.
What about the trend that came out, Mnuchin's last famous thing of trying to push through the regulation of KYC on wallets and holdings? How do you think that plays out?
I think it was very misguided. And I think my understanding is even a lot of people at FinCEN, which is the regulatory body within Treasury that deals with that, probably considered that misguided based upon the hearsay from my network. And I think it was a feeble kind of last minute attempt in the last administration to exert control over something that is basically uncontrollable. I mean, look, the Supreme Court has opined on software and software's role as free speech. And I think the way we think about CIP, customer identification processes in banking as it relates to the Bank Secrecy Act is completely out of whack. Nobody challenges it because nobody wants to be the one that everybody's afraid, right? To take this to court. But I just don't see how the extreme that we do in banking is actually legal in this country, but everybody's afraid to fight it. I'm not going to spend our investors' money fighting it. I'm just going to follow the rules because I don't know what else to do, right? And our customers accept it because they have to do it with every other service they use. I think that there's going to be more attempts at this. I do worry a little bit about the new administration, but I think ultimately they're going to lose. And I think, you see it like with Miami, right? You've heard about like the mayor of Miami. You see it in what's happening in Wyoming, a little bit in Texas. There are pockets of people that get it. And eventually it's going to spread. Right. And when I say it's going to spread, I mean this understanding that you can't stop it, that we should embrace it, and that it has value is going to spread like wildfire. Right?
Yeah, I totally agree. So switching gears a bit, your app has been running for how long now? It's quite a long time.
Well, the current version is about 2 years old, but we had an earlier version which was non-custodial. Now we have the kind of traditional custodial version, which is about 2 years old.
So when you've onboarded new customers and your existing customers, what change of behavior have you seen? In the last 2 years, we've had yield. Monumental, right? There's all of these things. What have you seen? What are people doing?
Yeah, it's a great question. So a couple of huge changes we've seen even over the last 6 months, I would say. The first is the amount of crypto deposits that we get off of exchanges onto Abra has gone from being 15% of our business 15 months ago to being 60 to 70% of our business today. Meaning I bought Bitcoin at Coinbase or Kraken, and it's just sitting there. I want to earn yield on it. I want to potentially borrow against it in the future. I hear Abra is a great way to do that. I'm checking out Abra. I look at it. I was like, wow, this app's amazing. I didn't know you could do all this with crypto. I'm not really a trader. There's really no reason for me to leave this crypto on an exchange. That is our business for those users is booming, right? And it's like millions every day flocking in. And so we still get the bank wires. We take unlimited bank wires from every country in the world. And that's great. It's for people who are also existing users moving money in. A lot of times I just say, I'm going to put even more in because I can earn 10% on my dollars and 5% on my crypto. And so we get people who do both. But one of the biggest changes is clearly the amount of crypto-based deposits we're getting. Even though we allow you to buy easily, just as easy as anyone else, they're moving what they have into Abra. That's the first big change. The second big change is the level of sophistication in the users that we're seeing. We get a lot of new users. What's a key? What's the difference between these 100 cryptocurrencies? We have guides for that. But there's this 25 to 40% of our user base at any given time that is actually really sophisticated now. And that creates a challenge for us because we have a huge dichotomy between newbies and people that are like, I need this advanced stuff. And catering to that range of users is tough, right? So like one example would be, we're not a sophisticated trading app, and we're not trying to be. If you're a pro trader, you're not going to use Abra, right? You might use our OTC function if you want to put something in storage for long term. But other than that, you're going to go to a trading site and, use all the tools. Now we have sophisticated people who were just investors saying, hey, I want advanced order entry types when I use Abra, which 2 years ago, no one would have asked for that. Right. So we're now getting this like second generation user, which is really interesting. And like I said, these features are not socioeconomic dependent, by the way. I get this request from, I have chief investment officers from funds using Abra with 7-figure positions, like in interest accounts. And I got poor farmers in Mindanao putting $15 in Abra by walking into a 7-Eleven equivalent with cash, Philippine pesos, and walking out with the pesos digitized on their Abra app. Same questions, by the way, no difference. They want exactly the same thing. And it's so this kind of evolution in understanding is been really interesting to watch.
So talk to me a bit about the differences globally, because you've got a very global business.
Yeah.
You're seeing, as you said, two ridiculous opposite ends of the spectrum.
Right. I'm
really interested in the global part, in the think about the US, we'll talk about that all day. But let's talk about, when you talk about Mindanao, it's like, okay, I want to hear about this. What's going on? What are you seeing globally?
So a few interesting trends, right? We take a tremendous amount of deposits in cash at retail. And this is happening in Southeast Asia, Central America, Middle East. Now, these users have to go through the same onboarding process that you and I do. They go through the same know your customer KYC, where they take pictures of their IDs or passport or whatever they have. They're onboarded, but the cash is in their pocket. And so we give them, they have a different view in the app than you do. If you start up Abra and press add money, it's going to say deposit crypto, go use your bank. They'll have another option, which is deposit cash. And then it'll bring up a map in their area, which shows them where they can go to deposit cash. I could launch it in the US, but nobody wants that.
How the hell did you set that up?
So what we did years ago is we started basically putting quietly these relationships in place with companies in the remittance space, retail, that already had large cash businesses. So we used our network. So I used to run a remittance business, right, which I sold to Digicel in your neck of the woods. And it's their mobile money app now. And so I know that world really well. So all I did was basically leverage that network and started doing deals with these different cash networks all over the place. And I have a really good guy who runs that business for us now out of Southeast Asia, but he runs it, in different countries. And we've been quietly building this cash network all over the place. But again, it's for a very specific type of customer, to your point. Now, our users in Singapore are wiring money to Abra, right? Our users in Hong Kong are wiring money to Abra. Our users in Jakarta, it's a mix. Our users in Manila, it's a mix. We get half and half. You go into the remote areas, it's cash, right? So I think that's going to be true for quite a while.
Are they using it for crypto? Or are they using it just for remittance payments?
No, it's a lot of it's speculation. A lot of it's altcoins. We have people in developing markets that are buying alts. They're buying Ethereum. They're buying Bitcoin. They're also sending money, but I'd say it's 65 to 80% speculation on cryptos, just like us. Like I said, it's no different than the 7-figure depositor. It's just a smaller amount of money. And it probably means even more to them on a proportional basis than it does to the CIO. Right. So, and so I'm very sensitive to that. Like I'll spend time onboarding friends of friends who are depositing 7 figures. And then I'll spend 2 hours at night answering questions from people all over the world who are depositing $50. And it really helps me to understand that there's no difference at the end of the day. If anything, that person is more passionate than the other person.
And how did you get that reach to all of these places? Because, I mean, again, it's a very US-centric world that we live in these days.
Yeah.
And people don't think that people in the Philippines on a remote island would even understand this, because we're still trying to get people to understand it here.
And the opposite is true, because if you look at places where we're popular in Africa, Southeast Asia, more people are holding crypto than in the US or in Europe, proportionally. And so the challenge for us has always been, how do we do all these deals, which was your first question, and then how do we integrate it in a way that has an easy to use experience? And we have more partners, locations than we have employees. So managing that network is complicated. And it has to be done in a way that doesn't tax the company, because it can be all consuming. And so it's pretty automated. And so the way I look at it is, okay, we've mapped uptake of crypto and geographies to cash. And so that part of the business is like, all right, we know where we want to accept cash, but there's other payment types. There's SEPA in Europe, there's Faster Pay in the UK, there's Spain, Mexico, there's Interac in Canada, there's ACH in the US, and the list goes on and on and on. So what we did is we basically took Abra.com as the website, and we built a marketplace, and we built it as kind of a big test. We said, all right, we don't want to start adding all these payment types to the app. One, unless we know they work, because we're always dependent upon a partner, right? Again, the on-ramps and off-ramps we talked about. And does it work? Will it scale if we get 10,000 people doing it in a few minutes, for example, as an extreme, which might happen when Elon pumps Doge again. And is it going to be usable inside the app? So we ended up building this crypto marketplace on Abra.com. The best way I can describe it is it's kind of like Kayak for travel, but now for crypto. You basically say, I'm in this country, I want to buy this crypto, and it'll show you all the payment methods that are available in your country. So like in Australia, there's like 5 payment methods. A couple are in cash, a couple are via bank accounts. And it says to you, for this payment type, for this much money, here's how much Bitcoin is going to land in your wallet. And you can choose which one you want. And it gives us visibility into which payment types are interesting, which ones actually work well, right? Meaning, do they actually settle from the partner as fast as they say they're going to settle, right? So that's how we tested Faster Pay support in the UK, Interac in Canada, Spain, Mexico. And now the ones that work well, we're adding back into the core Abra app, right? So not only are we making really good money on the marketplace, which wasn't even our original intent, it's actually a profitable business for us. But it's now allowing us to figure out which of those payment features to add into the core Abra app for certain countries. And the second part is localization. The app is 100% in English, and that's blown me away. We are going to localize the app this year, but all these people are using it, and I feel bad for it. I don't want them to. It's just we haven't had the resources and time to do it yet, but we are doing it now. The app will be in multiple languages this year, but even then, everybody's using it.
Amazing. So going on to the other key part of what you do, talk to me about security, because I think the space, and I don't know, and I want to pick your brains on this, I think the space is behind on the narrative that you need to keep everything in cold storage and, fight for your life with your Trezor and, all of this stuff. And it feels that the reality is that storing with online services, the high quality ones, is actually very secure.
It is, but there's a narrative here which is just as important as the reality, because the narrative leads to the emotion. And people want to have a good feeling about what they're doing. The last thing that they want is to put 10% of their savings into something and just not be sweating the price, but be sweating the safety. Right? Whether it's true or not is almost secondary at that point, because if you're so emotionally distraught over what you're doing, the reality almost doesn't matter anymore. So you need to basically give people comfort, and the reality needs to, in some cases, be better, because most people don't really have a good understanding of information security, right? So, I'm a cryptographer and I understand all that stuff. So I can actually ask questions of my team that a lot of CEOs can't ask. So let's break it down, right? So the first thing is the emotional part comes from a message of control. So the message here is, what we didn't talk about is I'd say 35% of our user base, they use Abra ephemerally. They're not using our interest earning accounts. They're not borrowing. They deposit, they trade, they get out, right? The same day sometimes, maybe the next day. So their dependence on Abra from a custody perspective is minimal to none, right? And they just like that it's super easy. And most of them are using cold storage when we ask them. Some of them are using other wallets that they just, they're used to. We don't care. It's fine. We care in the context of we want them to have control. And that's the message. If you want to go offline with your crypto, it's totally fine with us. If you want to keep it with us, you can keep it in the trading account where you have 100% 24/7 real-time access to trade. If you want to move it to the interest earning account, you have 24-hour, in most cases, access to it, even if it's multi-millions of dollars. And you're earning interest. And for that, you forego, real-time access. And we have that range. And that when people understand that, it really resonates, right? Then there's the practical aspects of how you manage this. And what we've done is we've built a whole kind of series of cold, warm, and hot kind of custody solutions that map to trading, interest earning accounts, our ability to move between counterparties who are borrowing, and then cold storage where we might be managing reserves that we need access to in a few hours notice. And each one has its own security requirements that we even go to the board and say, okay, here's what we're doing. Here's how it works. We're not going to share with you our secret sharing techniques. And here's who can't travel together. And, all the details of the sophisticated solutions that we have to build go all the way up to the board. And I think it's a key, pardon the pun, component of the retail crypto banking story is that you have a story that combines user control with an understanding that you have online funds and offline funds, and that the company that's managing this has a really good explanation of how they're managing each one of those things. And if the company gets hacked, why my money is not at risk. And that's a key part of the story. No company is unhackable. It doesn't. If you're online, some aspect of your company, if somebody's highly motivated, is probably hackable. And that's true for 100% of companies on the planet. I don't care who it is, including Amazon, anyone else. The question is, if they get in, what damage can they do? And I'm very confident in our case, there's nothing to hack. So meaning if you get in, right, you might be able to change the logo on the abra.com website on Amazon, but that's about it. And that's hard to do. And so, intrusion and detection and the way you respond has to be based upon, this idea of nobody's getting in, don't worry about it, is a bunch of nonsense, right? There's way more people trying to get in than there are people trying to keep the other people from getting in, right? And that's always going to be true. I can't hire people fast enough to keep everybody else from getting in. But what you can guarantee is it's nothing to find when they get in. Right. And so anyway, it's a long answer, but the bottom line is that the story of security has many components to it. And you need to address the emotional aspect of this in a way that resonates with the consumer, not just with the CEO and the board. And it's hard because, not everybody understands cold, hot, warm storage. They just understand, hey, I've heard that there's been hacks at these exchanges. What's going to happen when you guys get hacked? And why aren't you going to get hacked? And it's very basic. And so you don't want to talk down, but you have to give people this emotional comfort.
And so what do you do? Can you offer them 3 different pricing tiers, for example, where you say, well, here's your levels of security, choose your own?
No, you don't need to, because look, it's part of the offering. It's embedded, right? The fact that you have crypto in your trading account, the fact that you have crypto in your interest earning account, the fact that we're lending some of it to earn yield, the fact that we have some of it in reserve so that we can process deposits, it's just table stakes. It's not an offering in the sense of I have a custody offering. Here it is. Pick which one you want. It's I want to trade, so I have to keep some crypto here. I want to earn interest on my ETH, so I'll put it over here. Or I want to withdraw it to my hardware wallet. How do I do it? Okay, well, there's a withdraw function. It just goes to whatever address I provide. It's just table stakes for offering those services. The key again is, are you giving users comfort that they just take it on faith that this is best in class, world-class security that I consider to be completely 100% safe at all times.
The other one about security that people still get confused about is how the space is earning so much yield and what risk they're actually taking.
Yep.
How do you think through that?
Yeah, I think through it a lot because I manage 100% of my liquid assets through Abra now, cash and crypto. And basically the message, so I'd say three things, right? One, the first is the management team, we basically set up the interest earning accounts to be the product that we wanted for ourselves. We looked at the other products in the market. We said, what do or don't we like? Let's do it exactly the way we want. That's one. Two, let's be as transparent as we can as to how this works. I listen to podcast after podcast where other CEOs avoid questions. They don't talk about the percentage reserves. They don't talk about how many counterparties. They don't talk about concentration risk. And I said, we're not going to be that partner. I said, we have nothing to lose by just laying it all out there and say, if this works for you, this is how I manage my crypto, go for it. If you want to use Abra to trade and you don't want to earn interest, it's perfectly fine. But we're going to tell you how it works. And the third thing is make sure as we're digging into these details of who we're lending to, how do we set collateral requirements on a per borrower basis? How do we set interest rates and on a per borrower basis, that we're being smart, right? That we're basically saying, okay, if it's DRW borrowing with a $1 trillion balance sheet, yeah, they're going to have different collateral requirements than a three-guy hedge fund that wants to go 4x, levered on positions that they think are delta neutral, but probably have systemic risk. So we might get 2x collateral from the delta neutral, three-guy hedge fund and get 25% collateral from DRW because they could buy Abra 100 times over, right? So you have to be smart about understanding that use of funds, and you have to be willing to talk about it so that people understand that you're actually taking this seriously. So we run an investment committee at Abra that meets weekly to look at existing counterparties and adjust limits, for example, onboard and improve new counterparties that have gone through 2 to 4 weeks of due diligence in the background around use of funds, compliance, and a bunch of other things, just like a venture or private equity. And then we set rates and collateral requirements for every single partner individually. And that rolls up to be the rates. We don't start off saying, okay, the rate needs to be 10%. Make sure you back into it. We would never do that. Never. And there are companies that are, I know, because we've hired people that used to work there that told us it's crazy. And so we will never basically say, make sure the rate works out to be this. We'll say, do exactly what this right for this counterparty, and then tell me what the rate needs to be as a result.
And how do you see the evolution of these kind of supernormal yields? Because they are high yields, right? In a world of no yield, it's pretty high. So it's going to keep attracting capital, and the less blow-ups and risks that get exposed in the space, the more capital it's going to attract.
Yep.
How do you think it evolves? Because, what was interesting to me, and I spoke to another friend of mine about this too, and he's like, well, I sold some of my Bitcoin the other day and I just keep it in USDC.
Yeah.
I'm like, He goes, and I've suddenly realized I don't need to go back to my bank, because if I'm not using the money in the national world that I live in, my bank doesn't exist for me. I don't need it.
Right. Well, this is why I do refer to Abra as a crypto bank, right? Obviously, it's not regulated with a banking license. We do have a trust bank partner that manages the issuance of those interest accounts. But from the consumer's perspective, it's cash, it's crypto, right? Hopefully stocks eventually and things, other asset classes that they want in the same app. So I think that you're going to see more and more people be willing to store dollars first and foremost. Our users are mostly crypto first and dollars second, because that's how they find out about Abra. But we are starting to get people now who are coming in first and foremost with their big dollar positions and then adding crypto for a couple of reasons. One, because they have more dollars, and two, they're waiting for to take part of that stablecoin position and convert it to Bitcoin or ETH at the right price. Right. But even then, they'll keep most of it in the USDC or TUSD position. And so I do think that the demand for dollars has been incredibly high in my world. I think you're going to see an expansion of the first generation counterparties in crypto lending to move into traditional lending, supply chain finance, P2P loan origination, other forms of finance. And I think that as DeFi grows, as stablecoins get used in traditional finance, I think that will have a little bit of downward pressure on rates, because you'll be competing with banks. But the demand has been so high, especially as crypto prices are rising, that I think the dollar side of the business is going to be really good for a while.
what blew me away recently, I was speaking to some guys in Singapore who were involved in option market making and a bunch of other things. And I said, tell me about kind of stablecoin, particularly Tether use in Asia. And they're like, you have nobody in the West has any idea how many corporations are using it.
Yeah, I know.
To do trade finance, just to pay each other, and people are missing this whole thing. They think it's some sort of it's money laundering or ways of getting money out of closed economies. It's not. It's actually ways for businesses to pay each other. So are you seeing businesses using Abra for that kind of thing?
Think about this for a second. Foxconn is a large investor, one of our largest shareholders at Abra. They're one of the largest lenders in Asia, right? Just in their supply chain finance business. And that is in my opinion, that's the future of supply chain finance, because most Western investors are shut out of those deals because they happen too fast. Now you can basically invest in those deals in near real time. And you're going to see marketplaces prop up, like, you have Yield Street, Fundrise, Cadre, that are basically offering high net worth retail investors in the US access to these 10% real estate deals. You're going to see the same thing happen in supply chain finance and P2P loan origination. And the banks are basically back to this is part of, I don't talk about this much, but this is part of why I think the banks are fucked, because they can't compete with marketplaces like that. No, they don't want to.
I mean, again, like a Malaysian exporter who's exporting textiles to China, right? If they do it normally, they have to go and apply for the export license of the money in the textiles, and they have to speak to the central bank and the Chinese side. There's no Malaysian RMB markets. You have to go through all the FX.
Yep.
What they do is they do ringgit tether RMB.
Yeah.
They make instantaneous payments.
Yeah.
There's no restrictions on them, and there's also funding available by the markets.
It's effectively a fully decentralized Hawala system that has no off switch, that no government is in a position to stop. And it's not like the person who's doing the minting, whether it's Trust Token or USDC, Circle, doesn't know who that counterparty is. They have to onboard themselves just like somebody at a bank. So I actually foresee stablecoins, maybe even more so versus central bank digital currencies, as at least for the next 3 or 4 years, the future of banking for supply chain finance, loan origination, but also the crypto banking, which was the initial bread and butter. The other part of your question was what's going to happen like with Bitcoin and Ethereum rates, which are, that's 75% of crypto collateralized lending today. Dollars is still only about 25 to 30% because it's still a crypto-centric world. That will flip in the next 5 years, meaning when we have this conversation in 5 years, it'll be 80% dollars. And well, in today's dollar terms, if the Bitcoin price goes up 10x, it'll be a little bit different. But assuming that the Bitcoin price was normalized in today's value, it would flip. It probably won't in future price terms. So the question then, what happens to the rates on Bitcoin and Ethereum? Well, look at the band. As Bitcoin goes up and to the right, there's a 15 to 18% spread above and below kind of that normalized stock to flow target price, which is holding, right? The channel hasn't been broken, right, for a long time. What that tells me is the volatility along the way to $2 million Bitcoin and 50,000 Ethereum, whatever happens, is going to be the same as it's been all along. And so that means that all of these trading strategies that require Bitcoin, all of these plays on premium are going to keep going for many years, which means that the demand for Bitcoin is going to continue, right? And so I think that we're going to be in a 3 to 6, maybe 3 to 7% range of Bitcoin and Ethereum interest rates for 5 years. I don't see how it doesn't change. At some point, it has to change because it's a deflationary asset, obviously. You can't, otherwise you would be paying 100% of Bitcoin in interest every month at some point. So the system eventually has to give, but I don't think it's going to give for the next 3 to 5 years. And it's part of the reward of what I call the front, what do you call the Navy SEALs that are the front men when you go into battle, right? They're the ones who are bearing the brunt of this transition to a new asset class. When Bitcoin is stable at, $15 trillion in market cap, this is going to look totally different. I don't know how interest rates are going to look when that happens. I haven't completely thought it through, but the current model won't work, right? But I think, then it depends what happens with the dollar at that point. If there's no more dollar, then all bets are off. It's hard for me to get my brain around what happens to traditional yield curves as it moves to Bitcoin in that model, because there's no fractional reserve, there's no printing of money.
I've also thought that through and thought, it's a weird old world right now where the world's pristine collateral is US Treasury bonds. And every time there's a lending problem, i.e. there's not enough collateral for the system, the Fed lowers the cost of collateral. So you as a collateral owner gets less of it. And in fact, they make more of it.
Right.
But Bitcoin's the opposite. So I can't think it's going to have higher rates.
That's my point. So that model is unsustainable in a deflationary asset model. And anybody who's thought it through realizes that. I think that we're in another 6 or 7 years of transition to where it'll stabilize. And so after year 5 of the current cycle, I think the rates will have to come down. But I can't say I've thought through what happens in a model where people want to borrow. So the current theory is that, hey, everybody's crypto rich who got in early, they're going to want to borrow against those assets. So the dollar rates make sense, right? But what happens if the dollar goes away? You can't borrow at that point because there's nothing to borrow. You have to use the Bitcoin, right? So if that happens, then my theory is it's not about interest rates. It's about the diffusion and basically the spreading of Bitcoin to every nook and cranny of the world, where you actually see a massive redistribution of wealth, right? So and that's the Austrian theory, right? Is that if a private money existed, that it would be hoarded in the early days, but eventually you would have complete total wealth distribution because you can't hoard it if it's the only money, right? And so that's kind of where I come out if the dollar goes away in terms of interest rates, but I don't want the dollar to go away. I don't want it to die, but we're not helping ourselves with our current policies. So, the bond market's scaring the shit out of me. And so I am starting to think these things through, and all it tells me is keep hoarding, and, keep borrowing in dollar shit coins, and keep hoarding. And eventually, we'll see who wins. But I think Bitcoin wins either way. The question is, are we borrowing in dollars off of our portfolio, or are we simply spending the Bitcoin because the dollar's gone? I don't know which one is going to be.
No. So to finish off, what is the most exciting thing that you're seeing in the space? There's a lot going on. There's NFTs going on. There's the DeFi. There's all sorts of stuff going on. What is the thing that makes you go, God, that's really exciting?
Yeah, I think this topic of, I have a personal treasury in Bitcoin that I'm eventually going to borrow against while we're in this transition, is a new narrative that I'm hearing every day, every single day. Combine that with stablecoins built on the Ethereum network, and you basically have the future monetary system, at least for the next 10 years. And then we'll see what happens to the dollar. Like I said, if there's no dollar, then you're not borrowing anything. So that is the most exciting narrative, because that's the basis for Bitcoin, Ethereum as the future of banking, in my opinion. Bitcoin as the reserve asset, Ethereum as the application layer that makes all of this move around, including the institutional aspects of DeFi, but also the retail-facing pieces that companies like Abra offer. That's the part that's most exciting, or the story that's most exciting to me right now, is that so many people are starting to intuitively get this, that they should be managing their personal treasury eventually in Bitcoin, or at least part of it now, and then eventually borrowing against it.
Because the old way is you make a bit of cash, you stick it in the bank, you look for a term deposit, you earn a bit of interest, and that's your reserve, right? So that's
it turns into an annuity for yourself.
Yeah, and you might have been slightly apocalyptical, so you might have had some gold as well. So that was our previous reserve asset. Right. And now people are looking at Bitcoin. But my only thought about that, okay, I can see that. Not easy to do with a 70 vol asset that falls 80% every 4 years. That's my only struggle. Is we all talk about a reserve asset right now,
right?
But once your new house has disappeared out the window and you're now only looking at buying a new car, you're like, shit, I need to sell some of this stuff. That's my only issue.
Yeah, I agree with that. That's why it hasn't happened yet. But the question is, once Bitcoin gets to 10 trillion, and think about how much in Bitcoin value, how much is moving off of exchanges, so that it's, in dollar terms, there's still more on exchanges than there was a couple of years ago. But in Bitcoin terms, it's way less. And so as that continues to happen, I think those 80% drawdowns have to stop, because it's no longer a kind of real-time tradable asset in the traditional sense, at least not in the first generation sense. It truly is at that point a store of value, and that transition has then happened. We're in the middle of the transition. You can't have a transition to anything like this without volatility. It's like saying, how do I get my car from 0 to 100 kilometers per hour? Well, you have to get to 10, you have to get to 20, you have to get to 40. It's physically impossible to get to 100 without those steps in between. Well, that's what's happening with the price of Bitcoin right now. And so, but once you're at 100, you can stay 100, right? You can choose to decelerate or not, but this is the price we have to pay. And for us as the people on the front lines, right, we should be getting the benefit of that. That's what we think anyway. And so I don't think that the people who use it 10 years from now are going to look at it that way, because it's not going to be going up and down in price the way it is now.
Yeah, and also there's a number of things with that. Is as you go up the quality spectrum, volatility falls. So fixed income's got the lowest vol of all, then FX, then equities, so we kind of know as it goes, it loses volatility over time. Also, I don't know how much of the volatility of Bitcoin is actually the volatility of fiat money overall, because that's another part of this equation. Is what is the volatility of M2 right now? These are things we've never really had to deal with before.
Right.
And I think, I've been looking at some charts, spending time thinking about, okay, what does the S&P look like in Fed balance sheet terms? And bizarrely enough, there's been no bull market really. It's just kind of traded sideways since 2008. Yeah. And that's like, huh. Yeah. And when you look at gold versus equities, they've kind of been in the same range.
Yeah. They're both just a store of value.
Yes. And so therefore, I then looked at gold versus a basket of 27 global currencies, excluding the dollar, to give me an idea of what is fiat currency doing versus gold, because gold is like the trusted understanding of value. Yeah. Fascinating is those currencies have underperformed gold since the global financial crisis by 60%.
Wow.
What it's kind of suggesting to me is there is a currency devaluation of fiat, not of individual currencies against each other, not dollars against euros, but of all fiat, because of we've just seen the Reserve Bank of Australia today implementing yield curve control. That's basically unlimited printing of money if anybody sells them a bond. So when I look at that and I think, wow, has all fiat currency fallen 60%? And this is the bit that we're missing when we look at volatility of Bitcoin. Are we measuring the wrong thing even?
We are.
To get my head around this.
Right. Intuitively, everybody, even non-economists, kind of get the idea that there's a global debasement going on because, my favorite analogy,
because it's not in CPI, which is what everybody claims, right?
Exactly. But I go to my mother, who I'm from New York, and she's a Yankees fan. She's got a Mickey Mantle card somewhere. I said, "Hey, how much is that card worth?" She knows exactly what it's worth. I said, "Why?" "Well, nobody's got one. Everybody wants one." I said, "Great. Here's 10,000 more. What happens to the value?" She's like, "Oh, I don't want that." Right? I don't want that. Well, no. We can't have that. But you say the same thing about money, and people are like, yeah, you're right. Why do we do that? That's dumb.
Because you can't see it. It's hidden.
Exactly. So but that's the big lie, is that the global debasement is death by 1,000 cuts, and it has been true for 100 years. And so it's just that now we're in an end game of a cycle, and the last time we were in the end game, it didn't end very well. And so I don't know how this ends, but I hope it's not war. And if it has to be a move to another, either the world comes together and agrees that everybody gets to write down their debt. I don't see how that happens, but I just don't, I don't know how we get out of this, but I know that the last time it happened, it didn't end well. And when I don't know how something is going to end, it really bothers me,
Yeah, I think in the end, Neil Howe William Strauss's Fourth Turning is like the framework for all of us. We don't know the answers, but we know the change is happening, and it's real. I mean, this is not noise. The internet is disrupting money and all value. This is somebody put it to me that finance now has a basically unlimited TAM. So the total addressable market is every person on earth. If you're going to disrupt the financial system. That wasn't necessarily the case with Facebook and others.
That's right.
This is big. And, let's see how it plays out. Bill, listen, fantastic. Really enjoyed that. Lots to dig into. And
super interesting
ideas. So thoroughly enjoyed it, and we'll get you back soon.
Thanks for having me. It was really interesting.
Yeah, brilliant.
Thanks, man.
Thank you for watching this interview. This is just a taste of what we do at Real Vision. To learn more about the complex world of finance, business, and the global economy, click on the membership link in the description. Give us 7 days to change your life. This will be the best dollar you ever invest.